Recently, I got a comment from a viewer of the channel asking to test the London breakout strategy. Now, this is a very popular strategy. In fact, if you do a Google search on it, you'll find many blog posts and even YouTube videos describing the strategy with glowing reviews. Of course, as algo traders, we cannot take their word for it. We need to test. Now, first of all, let me describe what is this London breakout strategy. Most currencies and commodities have different activity during the time of the day. So, for example, the British pound has a different activity in the Asian session, in London session, and in New York session. The Japanese yen obviously have a different activity in Japanese session than in New York session, and so on and so forth. So the idea behind this strategy is to measure the range of the Asian session when the British pound trade against the US dollar. Okay, so here is the illustration of how that works. So imagine this is the 24-hour day trading, and in bracket reds, this is the Asian session. So the price in blue will go up and down. We will mark the low and the high of this Asian session. Then once we enter the London session, we wait for a breakout of this high to go long or a breakout on the low side to go short. And then by the end of the London session, we exit. So we can see we have different variables here. So the Asian session could be any time. This could be 1 hour, 3 hours, 10 hours. It's up to you. And then the London session also could be any time. It could be 8 a.m. London time to 6 p.m. London time, or 10 to 8, so on and so forth. Also, the window to take the entry is different. So for example, even if the London session is from 8 a.m. to 4 p.m. London time, I can limit the signal to take the breakout to the long side or to the short side to 2-hour window only, let's say from 8 to 10 a.m. And then if the signal happen, I exit at the end of the session. Now, as a futures trader, I don't trade Forex, so I will trade this pair, the British Pound USD dollar, through futures contract, which is the BP. So this is my chart. This is 15 minutes British Pound since 2006. That's a lot of data, and we should have many trades to test. The strategy is already applied. So these are my variables. I am waiting. Remember, I'm trading futures, and this is Eastern Standard Time. So my window to measure the high and low of the Asian session is 1 a.m. to 4 a.m. Eastern Standard Time. And then my window to take the breakout signal is between 4 a.m. and 8 a.m. Eastern Standard Time. Then I will exit. If any trade happens, I will exit at 11 a.m. Eastern Standard Time. Of course, these times are based on the strategy trading during the London time. Now, this is 0 fold 0. Let's not worry about these filters. I will get to it once we are into the strategy. So let's test the strategy. I will hit OK, close, and let's see the performance report. We are trading long and short. We are making money, 38,000, and we have a pretty good number of trades, and it's very even. So 2,224 trades on the short side and about the same on the long side. But the average trade is totally different. It's $5 on the long side and more than double on the short side. So this is very important to learn, which is to test the strategy as raw as possible before putting any profit targets, stop loss, filters, because you need to see if there is an edge in the strategy or not. So at least from testing the strategy as it is right now, we know it is a losing strategy on both sides, but at least we know that the edge on the short side is much better than on the long side, with many trades to back that conclusion, because we have more than 2,000 on the short and more than 2,000 on the long side. Now I did an optimization by changing the window of the Asian session. So I moved that window up and down, let's say from 1 to 5, from 1 to 6, from 2 to 4, from 2 to 5, 2 to 6, and so on and so forth. I moved that window to measure the high and low. Also, I moved the window to take the trade, the breakout in the London session. And then also I moved the exit. So I did many of these variations, about 5,000 plus variations on the long side and 5,000 plus on the short side. Here I have the top 200 of those variations. And if I check the net profit, you see it ranges from 17,800 all the way to 37,700. Now, the average trade of the best 200 variation ranges from $1 all the way to 15.48. Now, this average trade is based on the net profit. So this confirms the conclusion we got in the beginning, which is there is no edge on the long side. Now, the short side, same thing, and this is the best 200 of these variations, and we can see the net profits goes from 48 all the way up to 60,000. So again, confirms our conclusion that there is better edge on the short side. And if we look at the average trade, it ranges from $18.90, so that's about $19, all the way to about $34. And although the long side doesn't show any promise that it will perform, but at least we know that there are some windows better than others. So for example, this is the exit from 12 p.m. all the way to 11 p.m. Eastern Standard Time. And we can see the best time to exit is about 3 or 4 p.m. New York time. So this would translate about 9 p.m. London time. And we can see the high and low measurement. It doesn't matter which window you pick, they're almost all the same. And finally, this is the window where we take the strategy, where we take the signal. And again, not a huge discrepancy between the variables. So the most important variable in this strategy is the exit time. Digging in the data really shows you where the strategy performs, and you should always do this in Excel or in the platform itself. Now I'm using TradeStation for this test, and I hate the way they present their data. That's why I switched to Excel. But really, let's say we're not taking the long side for sure, but if we are taking the long side, we can see clearly that the high and low window measurement doesn't matter when you take it. The window when to take the signal also doesn't matter when you take it. Only the exit time does really matter when you take it. Okay, here is now the short side, and this is measuring the Asian session window. So we are measuring the high and low in the Asian session. And the biggest difference is here is measuring the high and low between 2 a.m. to 5 a.m. Eastern Standard Time looks the best, which is 55,000. The worst is between 2 a.m. and 4 a.m. Eastern Standard Time, which produces almost 10% less net profit. Now, measuring the window to enter, again, we can see a difference in the short side. Again, about probably 5 to 8% between the windows. So here, entering between 5 up to 12 a.m. is the best time. And you can see once you go to 1 p.m. Eastern Standard Time, we lose a lot. This is 52.5, this is 51. So we lose about 5%. Finally, again, the exit also makes a big difference on the short side. So this is exiting 7 and 8. This is the best time to exit the trade. And again, there is a difference. It's not huge. There is about 5 to 6% difference when to exit the trade. So now we know that we don't trade the long side because the long side doesn't produce profits anyways. And we pick a stable area for the short side. So let's test those settings. So looking at our strategy right now, a stable area is to measure the high and low between 1 and 4 a.m. Eastern Standard Time. Then we take the signal between 4 and 8 a.m. Eastern Standard Time. We exit at 8 p.m. Eastern Standard Time. Of course, you can pick much better values than these, but this is a stable region, and let's do that. And here we are only testing the short. So this is both long short. We are going with the short side only. And let's see the strategy performance. So here it is. We are making 28,400. Our average trade is $13. Now we saw we can make 30 something dollars, $39. But again, we're just picking a stable region. Now, instead of picking the best optimization, now you need to introduce a filter to the strategy. Remember, the raw strategy was losing either way, but the short edge is there and we can enhance it with a filter. Now with filters, there are many ways to go about it. I usually educate about going with direction and volatility and then start with other filters. Now I tested a few filters just to quickly find out what works, and I found direction works well with this strategy. And of course it makes sense because this is a breakout strategy. Not necessarily though, but anyway, it makes sense. And so if we add an ADX filter on the daily time frame, then we can enhance the strategy by a lot. So this is now the daily time frame of the same data. Again, we're starting in 2006. And now we added the filter, which is the ADX greater than 35. And this is our test result. So we have now 11,000, but now we are making $52 on average. So again, remember we had the best optimization at 38, but with a simple filter, we reduce our trades to 228 and $52 average trade. Now I will introduce another concept, which is to test on the day of the week. So now you understand what this filter is all about. So this is day of the week. So we will optimize this value from 0 to 5, step 1. That means 0, we're taking all days, and 1 to 5, which is Monday to Friday. And now if you look at the data, we see something interesting. So 0, which means we're trading all days, we have 228 trades averaging $51. But if we look deep inside the data, so this is Monday, Tuesday, all the way to Friday. First of all, they're all almost the same number of trades, which is really good because then we can compare them equally. And this is Monday, so the average trade 63. Tuesday, Wednesday, it's a losing proposition, even though the same number of trades, but we're actually losing on these days. And then Thursday is also considered a losing day because it's less than the average. And then Friday is a monster day. So Friday where we make all the money actually. So we can see this is 160 average trade. Now testing for day of the week is not a new concept. In fact, Larry Williams published this in his book about 35 years ago. But you need to make this as part of your arsenal. And of course, you need to dig down in the data to make sure that this is not an outlier, but in fact, this is the actual behavior on that day. Finally, we need to switch the last variable on. So this is APS, and if I switch APS to true, let's see what we get. Okay, so this is very interesting now. We are making $47,000 on a little less trades, 185, with an average trade of 255. Okay, armed with the knowledge that you saw in the video, what do you think I did to boost the performance of the strategy from $55 average trade to $255 average trade? If you know the answer, post it in the comments below and I will let you know if you are right or wrong. To learn more, make sure to watch these videos and I will see you there.